Hello friends, yesterday that is on 25th April 2022 in my Telegram channel I had asked one questions and there were a lot of query related to that. The question was that a company is having total book debts of rupees 10 lakhs and as a banker when you started the balance sheet of the company you found that the out of 10 lakh rupees of the balance sheet 2 lakhs were having the book debts outstanding for more than the operating cycle period. So suppose the company's total operating cycle is 90 days. The book debts outstanding was for more than operating cycle period, that is the 120 days. And one another the details were available in the balance sheet. That was the book debts of rupees 1 lakh out of 10 lakhs were under dispute, and the dispute was continuously coming means going on for the period of last 3 years. So the many of the users have raised the doubts that how the 1 lakh rupees that disputed debt has been treated as written off. Written off means how banker can treat this 1 lakh rupees in the CMA format. So friends, first you must know the difference between the what is the doubtful assets and the contingent liability. If you do not understand this concept, you will always get confused why this rupees 1 lakh rupees of book debts which are under dispute not to be treated as a current liability. See, for that you must know first what are the contingent liabilities, right now? So the contingent liability, see friends, here you must see we are talking about the claim which may or may not occur. Okay, right? Here we are not talking about the any assets. Here suppose the income tax has made the claim, means they have raised the claim against a particular company. So here the income tax simply has issued the letter to the particular company and demanding the amount. Here the income tax is not saying this particular asset is mine and please pay that assets back to me. Simply they are raising the issues and claiming the amounts. So right, so that claimed amount may convert, I say, the genuine claim by the income tax and the company is bound to pay, right? So all, if you see now friends, in this regard you will find here the all are just a claim but not yet decided by the company to be paid or not. But in this case, the query which I asked from all of you was related to the book debts. So book debts, I said this is the 10 lakh rupees outstanding book debts are there, and out of 10 lakh rupees, 7 lakh rupees is the genuine book debts, 2 lakh rupees is the having the more period outstanding than the operating cycle, and 1 lakh rupees is the disputed. This is the 1 lakh rupees is the disputed. Please bear with me that I am writing on the digital pad, so the handwriting may not be that much legible, but you have to make out. So now you see friends, now this asset 10 lakh rupees is there, and out of this 10 lakh rupees, the 7 lakh rupees is the genuine assets which, since see working capital finance, how you are giving against the stock and book debts, right? So you find that you must know what is the quality of the assets, right? Then against that assets only you can finance. So the assets available of 7 lakh is very much genuine. The company will get the fund on due date from the debtors. But this 2 lakh rupees, what I said, it is going beyond the operating cycle. So company may get or may not get, right? So these 2 lakh rupees will go towards the non-current assets, right? And this 1 lakh rupees, friends, see, company also, the dispute is continuously going on for a period of 3 years. So this dispute, see, company may get the fund or may not get the fund. But in, as a banker, what you are supposed to do, you should write the quality of the book dates only. So the quality of the book dates here, you will not write 10 lakh in the current assets. You will write only 7 lakh rupees. And here the book dates outstanding more than operating cycle. Here you will write book dates. These are non-current asset. Okay, these are non-current. Here you will write 2 lakh rupees. So 9 lakh rupees is done. Now coming to the 1 lakh rupees. See, if you write even in the non-current assets part now, So see, company is not going, since the litigation is on for past 3 years. So chances are there the company will not get any funds. So what you are supposed to do, you should write off from the right side, and on the left side you should reduce the capital from 5 lakhs to 4 lakh. Why I am telling you, friends? Suppose the company is having not only 1 lakh rupees of the disputed debt, company might be having another 5 lakh rupees of disputed debts. So, and company knows that he is not going to get the fund against this disputed fund. So, just to get the excess finance to improve the D ratio, what he will do, he will add that disputed liability which he is going to write off maybe the next year or subsequent year. What he will write in the book dates, he will write 5 lakh rupees on the asset side, and on the left side, on the liability side, what he will do, he will increase the capital by 5 lakh rupees. So earlier, if suppose the capital is 4 lakh, so he will write 9 lakh rupees as a capital on the left side. So my request to all of you friends, whenever any asset is doubtful, whether just treat this as stock. Out of this 11 lakh rupees stock, if you find 2 lakh rupees is non-moving, means obsolete, even the scrap value is zero. So in that case, what you will do? You will write, you will stock, you will write 9 lakh rupees as a current assets, and the 2 lakh rupees what you will do? 2 lakh rupees you will write off from the asset side, and from the liability side, the capital part you will reduce accordingly. So this is very good tool for the company as and when they find, see, the moment you will reduce the capital na, the company D ratio will deteriorate. The D ratio will deteriorate. So to get the excess finance, what they are doing, any assets which are non-moving, any book dates which are non-receivables, they are simply booking or showing on the asset side, and on the liability side they are raising the capital, right? So as a banker, as a due diligent banker, what you are supposed to do, on the right side, all the doubtful assets, be it the stock, be it the book dates, be it any plant and machinery, be it anything you find which are non-realizable, you write off, means reduce from the asset side, accordingly of the same amount from the capital side you reduce. Hope this doubt has been clear to all of you. Thank you so much.